Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over educational content to help us get better at trading. And so in this week's video on degenerative education, Degen Ed focusing on candlestick patterns. And so I did put out this poll yesterday on the community page of the channel, asking if you guys wanted me to go over options in Max Pain today or candle patterns. And the majority vote, just by one vote, was candle patterns. So I will be doing that, and I will be putting timestamps down below to the different patterns that I'll be going over in this video. And I also do want to note that there are tons of other patterns that I will not be going over in this video, so I'd be happy to do a follow-up next week, but I'd also be happy to go over Max Pain and options, selling covered calls, because I do find that to be, a really interesting part of the market, a good way to, learn a lot about prices that we might be seeing, by the end of the week. But anyways, as I do fumble with my words a little bit, I do want to note that I'm probably not going to be editing this, so I am sorry about that. But it's just going to be a long video. It's going to be tough for me to edit. I do want to have it out to you guys. So yeah, and if you do enjoy this content, make sure you like it and always share your thoughts in the comments down below, and make sure you subscribe to the channel as I do put out daily content going over charts as well as, technical patterns and things like that. So yeah, make sure you subscribe. But before I get into a list of top 10 patterns, I do want to point out that all of the patterns that I will be going over, I'm actually going to, let's see, open this image in a new tab so we can see it a little better, centered here, that, all of these patterns, it's not just one candle, it's a pattern relative to other candles. One candle does not tell you everything. You really have to look at it in the context of in the context of what is going on with the chart, the candles around it, what might be happening following the candle that we do see. And also do want to point out that there is also a relationship between the price and volume that is going to relate to these patterns. And so I do think that this is a really important takeaway, that if you do see price doing something, you should also look to the volume to see if it supports the trend that you're seeing. And so here, looking at this relationship, if price is going up and volume is also going up, that supports the continuation of price moving higher. But if you see price going up while volume is decreasing, that suggests that you might be getting to a top and that price could be turning around. And then thinking about price decreasing, if volume is increasing, that would suggest that the downtrend will continue. Whereas if you do see the volume decreasing along with the price, that suggests that you might be seeing a bottom and that price could be going up. And so I think kind of a nice way to think about this, not thinking about four different things. If you just think about it in two different ways, if you see price and volume moving in the same direction, whether that's going up or going down, price is then likely to go up, whether that's a continuation, like up here, or if that is a reversal, a bottoming signal like here. So if you do have price and volume going in the same way, there's no divergence there, that suggests price will be going up. But then here, looking at divergence in the price and the volume in the middle, that does suggest that price will be going down, either a continuation down if price is going down, or a top, that we will be seeing a topping signal if price is going up. So generally, if there is divergence between price and volume, that means that price will likely be going down. So just something to consider when looking at these patterns. And so the patterns that I wanted to go over, I just did kind of a general search of candlestick patterns, and this came up from Medium. And I don't have access to the full article, so I just thought I'd, do research on these patterns. Excuse me. So we can see Are these patterns clear? Are they clean? Or are there some caveats to them? Are some of them actually incorrect? And some of these patterns here are incorrect. And so, yeah, I just kind of wanted to dive into these because I think that a lot of people might just search for, a shooting star or bullish engulfing, but then could actually be misled by what they find on the internet because you actually have to do a little bit of digging to really understand the context of these patterns and how the patterns fit into the broader picture of the chart. And so, yeah, I'm just going to go over that, really just going over a bunch of Investopedia articles, going over technical patterns. And I do want to note that I had mentioned some of these are incorrect. These are actually not bullish or bearish engulfing candles because they don't engulf the prior day's candle. So I just found that really interesting. And then also shooting star, hammer candle, those patterns are based on the context of where they are in the chart. So I think it's really important to be considering not just one candle, but the broader picture of the chart. And so that's what I'm going to take us through. Really just going through all 10 of these patterns, reading about them on Investopedia. And then I do have an example for a bearish engulfing candle that I think is really nice, relevant to the market today. So I will go over that once we get to the bearish engulfing candle. But first, I'm going to start with spinning tops. And so here, switching over to the Investopedia page on what is a spinning top candlestick. And so they do have this nice graphic here. I might actually, an ad might pop up as a result of me taking a step back here, zooming out a little bit, but now we can see it here just behind Ed. A spinning top candlestick is a candlestick pattern indicating indecision about the future direction of an asset. So whether that's at the top as depicted here or at the bottom, it could suggest a reversal, but it's indecision. So it's tough to say. There's indecision in the market. It might continue, it might reverse. And so just scrolling down here, what is a spinning top candlestick? And so a spinning top is a candlestick pattern with a short real body that's vertically centered between a long upper and lower shadows, so the wicks to the top and bottom. And the candlestick pattern represents indecision about the future direction of an asset, and it means that neither buyers nor sellers could gain the upper hand. And so a candlestick pattern forms when the buyers push the price up during a given time period and the sellers push the price down during the same time period, but ultimately the closing price ends up very close to the open. And after a strong price advance or decline, spinning tops can signal a potential price reversal if the candle that follows confirms. And so confirmation is something I may go over in next week's video. I'm not going to go over it in this one, but I do think that confirmation is really a key thing. And that is effectively when you get a close either lower or higher than the previous day's either low or high would suggest confirmation of a continuation in that direction. And so after a strong price advance or decline, spinning tops can signal a potential reversal if the candle that follows confirms. And a spinning top can have a close above or below the open, but the two prices are always close together. And so just some takeaways from this are that a spinning top is a candlestick pattern that has a short real body that is vertically centered between long and upper and lower shadows. The real body should be small, showing little difference between the open and closed prices. And since buyers and sellers both push the price but couldn't maintain it, the price shows indecision and that more sideways movement could follow. And so just looking at this graphic here, we do see, that there is a real body. It's not a doji. There's a body to that candle, and it's more or less symmetric with the top wick and the bottom tail, or the shadows of that candle. They are symmetric, and so that suggests indecision. And so what does a spinning top candlestick tell you? So spinning tops are a sign of indecision in the asset The long upper and lower shadows indicate there wasn't much meaningful change in price between the open and close, and that the bulls set the price sharply higher and the bears sent the price sharply lower. But in the end, they met right around the middle. And so this indecision can signal more sideways movement, especially if the spinning top occurs within an established range. It can also signal a possible price reversal if it occurs following price advance or decline. And so sometimes spinning tops may signal a significant trend change. A spinning top that occurs at the top of an uptrend could be a sign that bulls are losing their control and that the trend may reverse. So that comes if bulls are in control and then you get indecision, that could mean a reversal. If bears are in control and you get indecision, a spinning top, that could suggest a reversal. So it is all about the context. If you see a spinning top, you have to look at the other candles to really understand, is there going to be a reversal or is there just indecision and, it might flatten out. So I think it's very important to be paying attention to. And, I could read more of this, but I'm just going to include a link to all of these Investopedia pages down below. I'm just going to skip to the next one because I do think that we have a pretty good idea of, what spinning tops are. And so I think in this graph here, before I do switch over to the next one, this shows what looks like a spinning top. Let's see. A spinning top up here, kind of hard with the grid in the background to see that, but you do have a spinning top here. You can see a small red candle there. And then we got confirmation the following day. So we had an uptrend here, and at the top of that uptrend, we saw a spinning top suggesting indecision that the bulls are no longer in control. Then we get a bearish engulfing candle the following day, confirming that breakdown, and then price goes down. And then here you do see another spinning top suggesting indecision. However, we just saw a continuation to the downside. So that does suggest that they're not, 100%. And none of these candlestick patterns are 100%. You just have to consider them in relation to the rest of what's going on in the chart. And so now going back to the top 10, the next pattern that we see, or candlestick that we see, is a shooting star. So I'll just be going over that. And I should also note that this is the same thing as an inverted hammer, just like the hammer here, it's inverted. A shooting star is relative to what's going on around it. And so looking at the Investopedia page, we can see here a shooting star, what it means in stock trading with an example. And so a shooting star here, again, this is just the graphic of the candle, but it is in relation to what's going on around it. As you see in this graphic, you have a star up here, but you have price moving up to that and then price moving down following it. And so this is a type of candlestick that forms when a security opens, advances significantly, but then closes the day near the open again. So whether this is a green or red candle, we do see that price is, in the bottom half of that trading. And so continuing on, what is a shooting star? So a shooting star is a bearish candlestick with a long upper shadow or wick with little or no lower shadow or tail, and a small real body near the low of the day. It appears after an uptrend. So that's a key thing. It's in relation to what happened previously. If there's an uptrend and you see a shooting star or an inverted hammer candle, that could suggest that the top is in. Said differently, a shooting star is a type of candlestick that forms when a security opens, advances significantly, but then closes the day near the open again. And so for a candlestick to be considered a shooting star, the formation must appear during a price advance. Also, the distance between the highest price of the day and the opening price must be more than twice as large as the shooting star's body. There should be little to no shadow below the body. And so with this being said here, the distance between the highest price of the day and the opening price must be more than twice as large as the shooting star's body. So I think it really, just means that this is worded in a very tricky way. But so the highest point and the opening must be more than twice as large as the shooting star's body. And so looking at this, really, if the open is down here, that checks out. If the open's here, not necessarily. And so you really just want to see that the open and close, I would say, are in the bottom half, definitely in the bottom quarter, that is clear, of the trading of that day with little to no tail or wick below. That would suggest a shooting star, especially if that is following an uptrend. That could suggest a reversal. And you could also view this as a topping tail, but a topping tail specifically is when you have, a maybe 52-week high or all-time high. You get a pattern like this, and if the close is in the bottom 25% of the trading, so the bottom quarter, that would suggest this is a topping tail, a topping signal, and that the top is in unless you can get a close higher than that day's high. So on the following day, that would then negate the topping signal of the shooting star or the topping tail. So something to consider there. And then continuing down with this chart, I lost control of, let's see, we've just got this ad here. There we go. Okay, cool. It's weird, it froze for a second. And so takeaways, based on the previous example from, let's see, the spinning top, I've really just gone over these points, so I don't think it's necessary that I read all of them. And so what does a shooting star tell you? Indicates potential price top and reversal. So something to be paying attention there to there. And now I need to, this ad takes up a lot of room. Let's see. Yeah, so I think that, there are no real, there's some examples here. So example of how to use a shooting star. I'm just going to zoom in here. And so it does look like, price has been rising up here. And then we do get some consolidation. You could mistake this as a bull flag because you have moves up and then sideways consolidation. That does suggest a bull flag. But because you've been getting these wicks to the upside and have not been able to get closes above them, see, you do see a shooting star right here as well as here, really. And really, or I guess this would be the shooting star, but you see these wicks going higher, but you're not able to get closes above them. And so that does suggest price will not be able to go higher. There's not enough strength. There's no volume pushing it higher. So you have price going higher on these days, but volume would be diminishing. And that would suggest you're going to see price turn around. And that is what you see following, not being able to get a close higher than these highs. And so that is the shooting star. And then also, I guess I should note the hammer candle. I will be going over that next, I guess. So yeah, the hammer candle is next on the list. And so I'm going to go over two things with this, one being the hammer candle and one being the hanging man. And so here, looking at the hammer candle, what it is and how investors use it, just getting past that ad there. What is a hammer candlestick? And so a hammer candlestick, a hammer is a price pattern in candlestick charting that occurs when a security trades significantly lower than its open, but rallies within the period to close near the opening price. And so this pattern forms a hammer-shaped candlestick in which the lower shadow is at least twice the size of the real body. And the body of the candlestick represents the difference between the opening and closing prices, which the shadow shows high and the low prices for the period, while the shadow shows the high and low prices for the period. And so looking at this, key takeaways from it, the hammer candlestick typically occurs after a price decline. So looking at it relative to the other candles, the rest of the chart, it would be following a decline. So you see price decline, you see a hammer that could suggest a reversal. Hanging man, on the other hand, is a little bit of a different story, so I'll get into that in a minute. And so the hammer candlestick occurs when sellers enter the market during a price decline, but by the time of market close, buyers absorb selling pressure and push the market price near the opening price. suggesting a bottom, that buyers are stepping in. That's why you see that wick or tail to the downside or shadow to the downside. And so the close can be above or below the opening price, although the close should be near the open for the real body of the candlestick to remain small. And so the lower shadow should be at least 2 times the height of the real body. And so that's really just like, you don't want to see a short little hammer or handle to the hammer. You want to see a notably sized handle to the hammer. You don't want to use a hammer with a short handle. It's not really that useful. And so hammer candlesticks indicate a potential price reversal to the upside. However, note that a hanging man will suggest otherwise. And so the price must start moving up following the hammer, and this is called confirmation. And so here we can see this nice graphic of the hammer candlestick, a price pattern in candlestick charting that occurs when a security trades significantly lower than its opening, but rallies within the period to close near opening price. So here, this would be a green candle. And so you open here, close here, and have this big wick here. It's a nice big handle to that hammer. And then you do get confirmation, which is a close above that previous day's high. And then again, confirmation, a close above the previous day's high. You do see that that did suggest a reversal. That's what you saw in this example here. But then going on to the hanging man candlestick pattern, this puts a twist on the hammer candle. And so from this, I'm actually just going to skip down to a graphical example. I assume there is one down here. And so, yeah, this looks exactly like a hammer candle. It's just black. So that means that the closing price, this would be red, is at the base of that candle. And let's see if there's another example down here in a chart. I'm just going to scroll to that. So many ads. I'm sorry about that. Okay, yeah, here. And so these do look like hammer candles, but they are at the top. So that's why a hammer candle, you look to a hammer at the base of a downtrend. If you see a hammer at the top of an uptrend or, following an uptrend, that could suggest a reversal. And that would also be supported, I would say, by diminished volume, whereas price is higher, that would suggest a reversal. So good to be paying attention to that volume. And so here there are 2 examples of hanging mans, which are hammer candles just at the top. You've got to look at them in relation to the other candles. And then as you can see, there were pullbacks following those hanging man candles. So good to pay attention to those. Next one on the list is the Doji, and that is really just, open and close are the exact same price, but you do have wicks above and tails below. And so from that, I will look here at, let's see, I scrolled down for this. What is a Doji candle pattern, and what does it tell you? And so a session in which the candlestick for a security has open and close that are virtually equal and are oftentimes components in the pattern. So it's good to pay attention to these relative to the other candles that you're seeing in the chart. So what is a doji? And so a doji is a name for a trading session in which a security has open and close levels that are virtually equal as represented by a candle shape on the chart. And so based on this shape, technical analysts attempt to make assumptions about price behavior. And so doji candlesticks can look like a cross, inverted cross, or a plus sign. And so although rare, a doji candlestick generally signals a trend reversal indication for analysts, although it can also signal indecision about future prices. So this is really, just exactly like a spinning top. It's just that rather than having a bodied candle, you have those closing and opening prices right around the same price. So it's like a spinning top, but there's just no volume to that candle, or there's no height to that candle. It's a candle that is expired at the base of it. And so the pattern that forms in the candlestick charts are signals of such market actions and reactions. So let's scroll down past some advertisements here. And let's see, there should be some nice examples. And so what does a doji tell investors? And so in Japanese, doji means the same thing in reference to the rarity of having the open and close price for a security be exactly the same. So it is the same, it is rare. Depending on where the open and close falls, depending on where the open/close line falls, a doji can be described as either gravestone, long-legged, or dragonfly as shown below. So let's scroll below to see those examples. And so here we have a gravestone doji where you have this big wick up. This would be bearish because this suggests that sellers are exiting the position up here. And so if this is at the top of an uptrend or following an uptrend, this could suggest that this is a topping tail and that price may be declining. And then a long-legged doji, you could also have a short-legged doji where you don't really have too much price action above or below. You have the open and close at the same price, and it is right around the middle of trading for that day. So that would suggest a potential reversal or really, just indecision because sellers are exiting up here, buyers are entering down here, pushing the price up, sellers pushing the price down, and so that really does suggest indecision. And then a dragonfly doji, where you do have the doji, the open and close, right around the top. This could be a bottoming tail, suggesting that following a downtrend that you might see a reversal. So this is a good one to be looking for, as well as the gravestone doji, because that suggests a top. Dragonfly doji suggests a bottom, whereas the long-legged doji suggests indecision. And so let's see if there's any other useful information on here. I will actually probably just skip to the next example, and then you guys can read further if you'd like to. So the next one is the bullish engulfing candle. I will also be going over bearish engulfing candles and give a real-time example of this because I think this is pretty important. And also do want to note that this bullish engulfing candle does not engulf the previous day's candle. This bearish engulfing candle does not engulf the previous day's candle. So they're actually not engulfing candles. So pretty bad examples here. Good to be paying attention to that. So here, I'm just going to click over to the bullish engulfing candle. Just scroll up to that. And so the definition example and what does it mean? And so the bullish engulfing pattern is a white candlestick or a green candlestick that closes higher than the previous day's open after opening lower than the previous day's close. So it engulfs the previous day's candle. And there's really two ways to look at this. One can be just that it engulfs the candle of the previous day, or, a really strong signal would be if it engulfs all of the trading from the day before. And that is the example that I have to show you. That is a bearish engulfing candle that I will show in just a minute. And so what is a bullish engulfing candle pattern? And so a bullish engulfing pattern is a white candlestick or a green candlestick that closes higher than the previous day's opening after opening lower than the previous day's close. It fully engulfs that candle. It can be identified when a small black candlestick or a red candlestick showing a bearish trend is followed the next day by a large white candlestick showing a bullish trend or a reversal, and the body of which completely overlaps or engulfs the body of the previous day's candlestick. And so some takeaways, this could suggest a reversal. I'm not going to get into all of these bullet points because it will take too much time. And so understanding a bullish engulfing pattern. The bullish engulfing pattern is a 2-candle reversal pattern. So it requires 2 candles. You can't just look at one, you need to look at 2. It has to be relative to the other candles on the chart. And so the second candle completely engulfs the real body of the first one without regard to the length of the tail shadows. However, if it does fully engulf those tails, the wicks of the previous day, that means it's even more bullish or even more bearish, depending on the pattern that you're looking at. And so let's see if there's some examples down here. Yep, so this is a pretty nice example, pretty clear. You've got this small-bodied red candle or black shown here, open here, closed here. Doesn't look so good, but it is a spinning top. It could suggest a reversal. And then the following day, you get this bullish engulfing candle opened below the previous day's close, and then closed above the previous day's open. And so that does engulf the previous day's candle. That is good, but it does not fully engulf, and it does not require engulfing the previous day's high and low, but that does make it look stronger, so something to be paying attention to. And let's see, are there any other examples down here? Let's see. Bullish engulfing pattern versus bearish engulfing pattern. I'm actually just going to switch over to the bearish engulfing page here so we can look at that. So just scrolling to the top here. Yeah, let's check out the bearish engulfing pattern, definition and example of how to use. And so in technical analysis, the bearish engulfing pattern is a chart pattern that can signal a reversal in an upward price trend. So that would suggest that the top is in, it might be coming down. And so comprising two consecutive candles, the pattern features a smaller bullish candle followed by a larger bearish candle that engulfs the first. And this formation is considered a strong indicator that the prior upward momentum is waning and a reversal is on the horizon. Keywords on the horizon. It could be in the next day, it could be in the next week or month, depending on the time frame that you're looking at, depending on how long price has been in an uptrend. It might take a little bit longer for that reversal to play out if it has been a long-standing uptrend. And so let's see if there's an example here, and then I will give you a real example from a stock that pretty much everybody is talking about right now. So let's see, are there any nice visual examples here? I don't think so. Maybe if I do scroll to the bottom, it's really just a bunch of ads. I apologize about this. I guess I should note some pros and cons about the bearish engulfing candle, which would also apply to a bullish engulfing candle. And so, but just be kind of, in reverse as far as direction goes. And so pros are that early warning sign system, also, with bullish engulfing candle, early warning sign that price might be bottoming and then it start going up, indicator to buy for a bullish engulfing candle. It's simple to identify, highly versatile, good for risk management, and stronger confirmation. And some cons can be false signals. I've definitely seen those. Can also depend on the context. You've got to look at the bigger picture, the trend leading up to it. That is going to be very important. It is also a lagging indicator because if it is a bearish engulfing candle, you've already seen the high, but that's also, you can never time the exact top, you can never time the exact bottom. And so any indicator is going to be lagging to some extent because you can never be exact with the top or bottom, but this can prepare you for to embrace for further downside or continuation, a reversal to the upside. So good to be considering that. It does require confirmation, and there can be emotional pitfalls so that, if it does drop off, it's just, all the emotions of trading in the market. And so the example that I do want to give is if I do come over here to Webull, this is the NVIDIA chart. And can you identify the bearish engulfing candle on here? And this is a pretty pronounced, pretty impressive bearish engulfing candle. And so on the trading day of March 8th, we did hit an all-time high of $974 on the day with the bearish engulfing candle that completely not only engulfed the candle from the previous day, but engulfed the entire trading from the previous day. And so this does not look good. And so I do think that NVIDIA will be seeing a top pretty soon, but we're going to have to wait for that. And one could make the argument that, but this looks like a bull flag formation because there's been this big up move consolidating to the side. It is quite possible we do see a test of the highs, but you also need to think about this as on the trading day of the 8th, we did come down more than 5.5% on the day. And following that down move, we consolidated. And so one could argue that this is actually a bear flag, that we are consolidating to the side following this bearish engulfing candle. And so it's not looking too good for the stock. I think that is a nice example of this bearish engulfing candle. It's pretty pronounced at all-time highs. We will have to wait and see, though, how this plays out. It is quite possible we do eclipse 974, but it is also quite possible that the top is in following this bearish engulfing candle, and that we are seeing a bear flag, and we will see a break to the downside to fill this gap and, to continue even lower potentially. So we'll just have to wait and see. But now switching back over to Chrome here to look at some more of these patterns, evening star and morning star. Let's look at those. All right, so evening star, what is it, what it means, and give an example. And so what is an evening star? So an evening star is a stock price chart pattern that's used by technical analysts to detect when a trend is about to reverse. It's a bearish candlestick pattern that consists of 3 candles, a large white or green candle, a small bodied candle, and then a red candle. And so that is, the top is already in with this, so it's tough to know. Once you see the pattern play out, let's see, like over here, you've already come down some. And conversely, with the morning star, you've already come up some, so you can never time the top or bottom exactly right. And so in evening star patterns are associated with the top of a price uptrend, signifying that the uptrend is nearing its end. And the opposite of an evening star is a morning star pattern, which I'll go over in a second, which is viewed as a bullish indicator. So it's really just the opposite of an evening star. And so let's see, I've kind of gone over all of those points. Let's see if there's some examples here. If I do scroll down, I do feel like there is a nice, okay, so here is a nice example of this evening star, and it doesn't, have to be a specific shape necessarily. It's just that you're kind of getting like this extended top and then a pullback. And so that suggests that the top is in. And then for this example, a great example, you do see the price decline a lot following that evening star. So something to be paying attention to there. And there's no example at the top. I do think that there might be one for the morning star. And so how to trade the morning star pattern. And let's look at this. I'm just going to scroll down to see if there is a nice graphic of it. Yep, so here we do have a morning star, big red candle or black candle in this example, and then a basically kind of making a U shape in the chart. Then you have this morning star that suggests a continuation. And so while this, is not at the bottom, this pattern suggests continuation. So if you were to buy here, you would still be able to make some money on that. So, I think that is a useful indicator. And then conversely, for the evening star, this would be just reversed. And this could be a nice indicator to exit the position before it continues down lower. And so I'll just read this bit and then I'll continue on to the next one. And so a morning star is a visual pattern consisting of 3 candlesticks that are interpreted as a bullish sign by technical analysts. And a morning star forms following a downtrend, and it indicates the start of an upward climb. So even if it's a lagging indicator, you can establish a position and make a little bit of money on the upswing. Just, don't want to get too greedy. And then it is a morning star forms following a downtrend, and it indicates the start of an upward climb. It is a signal of a reversal in the previous price trend, and traders watch for the formation of a morning star and then seek confirmation that a reversal is indeed occurring using additional indicators. So you really want to be using these, in conjunction with others. If you see one indicator that suggests reversal, whether to the upside or downside, that's great, but you really want to look for multiple patterns that do suggest that continuation or reversal that you're looking for. And if you get alignment of those indicators, that would make you feel more confident in it, that it is more likely to happen. And then coming back to the list of these 10, I'm going to go over the 3 soldiers and 3 crows, also going over the falling 3 methods, because I think that is important, because while this does look like 3 soldiers, it could be part of falling 3 methods, so something to keep in mind there. So just going over here to, let's see, the top here, 3 white soldiers, candlestick pattern in Trading Explained. And so what do 3 white soldiers mean? 3 white soldiers is a bullish candlestick pattern that is used to predict the reversal of the current downtrend in a pricing chart. And so the pattern consists of 3 consecutive long-bodied candles that open within the previous candle's real body and a close that exceeds the previous candle's high. These candlesticks should not have very long shadows and ideally, or wicks, tails, and ideally open within the real body of the preceding candle in the pattern. And so here are some takeaways from this. 3 white soldiers are considered a reliable reversal pattern when confirmed by other technical indicators like the relative strength index, or RSI. That could suggest bullish divergence. That would suggest, that it's going higher. Also, volume, you'd want to look for that it does support price going higher. And the size of the candles and length of the shadow is used to judge whether there is risk of retracement. And the opposite pattern of these 3 white soldiers is 3 black crows, which I'll go over in a minute, which indicates a reversal of an uptrend. And so what do 3 white soldiers tell you? We've kind of gone over that. See if there's an example down here. Let's see. Okay, here, looking at this example. Okay, yes, this doesn't really show you what happens following it, but you do have this downtrend, and then you have these 3 white soldiers that would suggest continuation to the upside, but we don't see evidence of that in this chart. Kind of a bad example there. And then before I get onto the 3 black crows, I'm going to go over the falling 3 methods. Because this, is complementary to the 3 white soldiers, but this is actually bearish. So it's good to be paying attention to this. If you do think you have identified the 3 white soldiers, it may actually be falling 3 methods. And so what is a falling 3 methods pattern? And so the falling 3 methods is a bearish 5-candle continuation pattern that signals an interruption of a current downtrend, but not a reversal. So this is, contrary to the 3 soldiers. The pattern is characterized by 2 long candlesticks in the direction of the trend, in this case down, at the beginning and end. 3 shorter counter-trend candles appear in the middle, and then this would then be followed by a red, basically engulfing candle of those. And so let's just look at the example. I'm pretty sure they have one down here. Let's see, just scroll to this. Yeah, so you have this big red candle, and this, what might be interpreted as 3 white soldiers or 3 green soldiers going up. But then you get this big red candle. So if you do see, 3 white soldiers, it may very well be the start of the falling 3 methods, and that is a continuation of the downtrend that you would see. And contrary to this, you could also see rising 3 methods, which would be the exact opposite. If you see 3 red candles following a green one, that could suggest that price would be continuing to the upside. So good to be keeping that into consideration when considering a pattern like the 3 black crows. And so how to use the pattern. So what are the 3 black crows? 3 black crows is a phrase used to describe a bearish candlestick pattern that may predict the reversal of an uptrend. And candlestick charts show the days open, high, low, and closing prices for a particular security. And so for stocks moving higher, the candlestick is white or green. When moving lower, they are black or red. And so the black crow pattern consists of 3 consecutive long-bodied candlesticks that have opened within the real body of the previous day's candle and closed lower than the previous day's candle. Often traders use this indicator in conjunction with other technical indicators or chart patterns as confirmation of reversal. So you need to be looking at other candles, other patterns that you might be seeing. You can't really just rely on one of these, not one of any of them. You have to look at multiples. So let's see an example down here. Hopefully there is one. Yeah, and so this 3 black crows. And so this, you can clearly see this is not a rising 3 methods, whereas if this white candle here, which would be green, if this came all the way down here, if it opened down here and then went up there, this could potentially be a rising 3 methods. If you would then see a green candle following these 3 red ones, but you don't see that. And so this does suggest basically a continuation to the downside. What you see here is consolidation. I would say this is a bear flag and price is likely to move lower. So good to be keeping that in mind. But I have gone over basically all of these 10 patterns. Hopefully you did find this to be helpful. And if you do have a suggestion for next week's educational video, I will post another poll either on Monday or Tuesday of next week to either go over more candlestick patterns or options, max pain, stuff like that. Hopefully this was helpful for you. And if you did find it helpful, make sure you like it. Always share your thoughts, comments down below, and make sure you subscribe to the channel for more videos like this. Thank you so much for watching and have a great rest of your week. Take care.